I am Nancy Mendes, broker with Royal LePage Equity Realty. These past few days, it's in the news that the bank regulators are proposing a higher mortgage stress test level from the previous 4.79% to 5.25 or 2% above the market rate, specifically to cool off the real estate market. How will this hike shape the real estate market? These are a lot of questions on our mind. To answer some of these and other pressing questions, I've invited Bobby Abraham, Mortgage Development Manager with the National Bank since 2012. He has been in the Canadian banking industry since his arrival to Canada in 2003 and has over 18 years of Canadian banking industry knowledge, exclusively handling mortgages over the past 9 years with the National Bank. He has helped thousands of clients over the years in this industry. What sets him apart is his trust, knowledge, sincerity, and promptness, which makes not only his loyal clients avail of his services, but they also refer him many other clients. We ourselves are testimony to his over-the-top service. Hello, Bobby, and let's
Hi,
get
Nancy.
straight to question and answers.
Thank you for the warm introduction.
Thank you. So is this for fact that the banks will be implementing the highest stress test for mortgage borrowing effective June 1st? Can you tell us more about it?
So it is a proposal status right now. They are hoping to put that into perspective on the May 24th, after which, if vetted by the other members, it will come into effect from the 1st of June. Yes, so it is a proposal in process, but it takes effect if they go through with it on May 24th.
And what are the possibilities that it
Pretty
will
high. I would say pretty high. And again, these are personal opinions, not to be treated as if it is representing the organization I work for. So just wanted to throw that disclaimer out there.
Okay, that's fine. Okay, so this increase is definitely going to affect the borrowing capacity of real estate buyers. So specifically, how will it impact someone who is putting down less than 20%?
So earlier it was a little unclear whether it was going to impact both the insured or the uninsured mortgages. And for the purposes of clarifying, 20% and more is uninsured mortgage and less than 20% is insured mortgages. As of yesterday, what we've understood is that this is going to affect only the 20% and more, not the insured mortgages is the understanding. Again, it's still in a very fluid process. They may make changes because of suggestions that may come from different lobbying factors. So at this juncture, it looks like it is looking at uninsured mortgages that may be most affected.
So that was my next question, whether it would be only for uninsured or is it across the board for insured and uninsured mortgages?
That's right. So having to add to that, the basic logical difference is earlier there was a stress test without a base flow rate. Now they're saying we have to have a base flow rate before we do the calculations for uninsured mortgages. So for instance, if they say 5.25, which is the number that they're looking at, that becomes the new flow rate over which the calculations will be calculated, or it would be the contracted rate plus 2%. So if somebody were to get 2% as the rate of interest, for instance, the qualifying rate technically would have been 2% plus 2%, 4%. But they want the base rate to be at 5.25, not as it used to be before.
So I heard that they will take the higher.
That's right.
The higher rate. Okay.
That's right.
So coming to like in terms of layman person, so somebody who were to qualify today on a $1 million house with this stress test, how much would they be eligible to qualify for?
There are a few variables to it, but if you were to look at a ballpark, it could be looking at about 8 to 10%, again, because of it is case specific. So, but if you were to ask me, in general, do you think there is a specific number that you can put to? I'm thinking between anywhere from 7 to 10% also that could be impacted in terms of the borrowing capacity.
Okay. So, is there going to be a program for high net worth investors?
With the National Bank, we already do have one. And I'm part of a pilot program that is there for multiple property investors. We call it the rental proof of concept. Basically, it's based on the debt coverage ratio of the properties that are owned. We do have that in place, and I'm part of that pilot. Not sure when it will roll out, but yes, we do have for high net worth, where we look at other parameters other than the standard ratios. There's also other programs that we have, which is for the primary residence, where the net worth of a client is looked upon far more lucratively and in holistic purposes before they say, yes, we are okay with that. We do have a couple of programs with our bank.
Okay. So, does your bank also have a new immigrant incentive program? Say, as you know, most of these new immigrants have more than enough money for down payment, but may not have high paying jobs and therefore may not qualify under this new stress test. So, do you all have any programs for those individuals?
Absolutely, absolutely. In fact, one of our newcomer programs are one of the best out there, where we do give the benefit of doubt of somebody who's integrating into the society. For instance, it's a nurse. It may take some time before she can finish her qualification locally and get into that mainstream of her career. It could be a physiotherapist. A lot of skilled trades may need a certain time frame before they migrate into that. So there are three programs that fit into newcomers, but some with the requirements of standard income, some without. So I can go to more specifics if somebody has a circumstance, and we could look at those options on an individual case by case basis. But yes, we have a fantastic program.
Okay. Um, so, lastly, I have another question which says this stress test is now like a sword hanging on top of the buyers, especially the ones that were already pre qualified earlier. So, how will it impact them?
That's a tough question to specify and answer. Yes, it will affect if they don't have a particular purchase transaction in place and an approval in place before June 1st, if the rollout is implemented. However, if they've already been pre-approved, or there's a difference between pre-qualification versus pre-approved. So if they are pre-approved and they have an approval in place without this impacting them because they grandfathered an approval, that would be different. However, if they are only pre-qualified and they're going to put an offer, they should consider putting it soon, based if they want it to be based on the current terms and qualification. If they're okay to be reduced in their borrowing capacity and they're waiting for a right time to buy the property, that's their choice. But again, it's case specific. I would need to know more information for each client and where they stand with what they are.
So, if somebody were to put an offer today, do they have to close it before June 1st, or do they have to get pre approved before June 1st? Is there a deadline date, or?
Fantastic question. I was about to expand on that. So,
Mhm.
if, to my understanding, again, I re-emphasize to my understanding, if you have an approval before June 1st, but if the closing is as far as November, December, then we are okay as long as you have an approval. The guideline is that you grandfather the approval prior to June 1st before these new rules get implemented. And again, it's still too premature to make that comment, but that's how it works. The actual approval, the purchase transaction, if it happens after June 1st, by default, then you have to be approved on the new guidelines. But if the purchase transaction is between now and let's say May 31st, and even on May 31st, we're able to submit and get an approval, then we are going based on the current guidelines, not the new guidelines.
Okay. Is there anything else you would like to share with us that you want us to be aware of? Has realtors or has new buyers who are out there in the market?
I would ask the viewers or your people who are following you on this to give this a lot of thought. It's a big liability that they're taking, and so to put a lot of thought in choosing the right realtor, right team, so to speak, because we are an extension of your team, and getting the right advice, because at the same time, it's a new obligation, a big liability, and they should not be just taking an impulsive decision on these type of things. There are, apart from financial implications, there's emotional and psychological impacts that it can have. So I would certainly recommend that they choose a good team, go through their due diligence process. There's a lot of research available online in terms of new to Canada programs and insured programs, depending on what their capacity is. I certainly would ask them to do their due diligence and, most importantly, choose a good team. I echo your sentiment on that.
I also was reading something on the news today that there is a way to circumvent this stress test by adding on a guarantor, maybe parents who are already, have the potential, to qualify. So would that be something to, as a bank to note? And you have anything to say about that?
Again, too premature because it has not come out in the actual guidelines yet. So if there is a kind of a twist to the tail, you adding existing person who's been here in the country for a while, they're no longer newcomers, but they are already seasoned in the industry. So by adding them, by default, what happens is if it's an insured mortgage, whoever is on the mortgage have to be on the title. So by adding an existing person to that effect, is that going to change the equation? Perhaps, but it's too premature for me to make a comment on that. But that's something I would consider as an option if allowed.
So just as there is a lot of ambiguity in this stress test, I am guessing there are a lot of other peoples who are watching this also may have a lot of questions. So I want all these people who have these questions specifically for Bobby, you can either DM me and I could pass it on to Bobby and maybe he can answer these questions. And thank you, Bobby, for coming out on a Saturday morning and spending your valuable time to answer a few of our questions. Thank you very
Pleasure.
much.
And I wish you the best.
Thank you.
Cheers.